South Africa's unsecured lending industry is a shambles and much needs to be done to get it back on track. Now, this is the view of Dave Woolam, former Abil Chief Financial Officer, who joins us now to explain the steps that need to be taken to restore credibility to the sector. Dave, last time we had you on, we didn't have enough time to delve into the necessary steps that you suggest that could help turn around the industry. And the first one that you make mention of is the creation of an industry body in order to restore some kinds of codes of conduct. First of all, why isn't there such a body in existence?
Well, I think there are a number of bodies that are typically lobby groups, smaller groups, furniture retail bodies, credit providers bodies, but most of these tend to be kind of think tanks and groups of people who maybe are lobbying to look after their interests. What I'm proposing here is a body who are going to come together seriously to commit to a set of rules, to a set of code of conducts, to a set of ethical practices, and to a set of responsible lending principles, and to make those both very transparent and public, but also to commit themselves to being audited to those.
Who would be on this body, Dan?
Well, I think it would have to be an appointed independent organization. So if you think about the analogy, it'd be like a rating agency. It would be an independent body who would set these principles. So there's an example that's called smartcampaign.org, which is set up an international organization for responsible lending. I think we could tailor something like that into our context, and it could be brought together, approved, agreed upon, and then audited. And if you then comply with those principles, you can then carry the flag, a sign, some sort of recognition that you are one of the good guys. And if you can't comply with the rules, well, then you won't be able to carry the flag. And we think that will slowly start to separate the legitimate from the illegitimate, because really there are a lot of really good guys in this industry, and they're being tainted by the smaller, unscrupulous people. And this is a vital industry to get back together again, because access to credit is really very, very important for millions and millions of South Africans.
And no doubt that kind of body that you make mention of, they would be able to draw the line between misconduct and maybe take a forceful approach to misconduct. Have we seen that taking place in South Africa?
No. You see, I think what's been one of the issues is that the regulator has not had enough teeth and has not really had enough, hasn't had enough tools and mechanisms to be able to deal with misconduct. So, for example, we have had not one single case of prosecuted reckless lending in South Africa, and yet we're sitting with 47% of the population in default on their loans. Now, that doesn't really make sense. So the regulator is trying to impose a code of conduct. I think this needs to be something the industry actually takes forward rather than being imposed on by the regulator.
That's extraordinary. There's not a single case of reckless lending.
No.
Who would be the ones making the charges?
The regulator. The regulator
itself has to charge reckless
lending. We
can't as consumers.
Well, as a consumer, you can take a complaint to the regulator, and the regulator can bring a charge. And we ourselves have taken dozens and dozens. The organisation I represent, they just have come to know there's been no fruition to those charges. The problem being,
who is this regulator?
The National Credit Regulator.
So we've got a fancy building that's I've seen it on the way to Pretoria, and that's where they sit.
But look, I think the regulator's been significantly understaffed, has not got enough capacity, and I think there's a lot of improvement that needs to happen in the regulatory function as well. In order to, the analogy I've used very quickly is, in order to, it's a bit like a game of rugby. You've got to have fair play on the field. You've got to have a referee who identifies when there's not fair play, and there's got to be punishment for when those rules are broken. And that's what we need.
Question is how you get the referee to do their job appropriately. But let's take a look at credit life insurance. That's also something that we saw rather recently in the newspapers. One of our former colleagues from MoneyWeb, Malcolm Rees, wrote that story, and it's really come to the forefront now. But credit life assurance, how does that work, and what's the main issue there?
So it started out as a benefit, and I'll use the word inverted commas, benefit to customers, that if they were to die or they were retrenched or they were disabled, the insurance policy would repay to the lender the outstanding balance on the loan. I think the principle is sound, but what happened is when the NCA came into being, the interest rate caps that were imposed and the fee caps that were imposed made it quite hard for certain credit providers to make the profits they would like to make. And so they used credit life, which was not capped and was not regulated, but there was a clause saying that the premiums have to be reasonable, but they just went, it was open season. So I've got an example, just as a matter of interest. I've got an example here, which I brought in from a company called Letsatsi Loans. They're not insignificant. I did a calculation on their credit life premiums. They are charging on a 20,000 Rand loan, the premiums over a 3-year period are 28,800 Rand. Now that's to cover you for dying, being disabled or retrenched. Now the risk is about 2,000 Rand, maybe even less. It's
so there's a loophole and they are driving a
people are driving this loophole.
Like garnishes as well, the garnishy order story.
Absolutely, yeah. So what we are actually claiming is, and the problem is this is a multi-jurisdictional issue. Insurance is covered by the FSB. The NCR is covered under the DTI and the National Credit Act. There's confusion about who reigns here. We're actually arguing for a very simple solution. Do away with credit life, bring it into the loan as a forgiveness clause, and allow for an additional interest rate to cover for the risk. Capitec are already doing it this way. In other words, you enter into a loan and the loan says, if you die, we won't ask you to repay the loan.
We're running out of time again, and we're not going to bring you back for a third round, but garnishy orders. What is your view on how this can be dealt with?
Garnishy orders are a very important legal mechanism for creditors to be able to pursue the rights where debtors won't pay. What has happened, unfortunately, is that it's become a free-for-all because there's a very simple process. A single piece of paper has to be signed by the debtor, acknowledging his debt. That goes to the court. The clerk of the court stamps it, serves it on the employer, and that's the end of the story. We think that there are way too many loopholes. There needs to be a much more rigorous process of ensuring that the right information is collated. And what we would be proposing is that an administrator stands between the credit provider and the courts to ensure, like a payment distribution agent, to ensure that all loans that are garnishees are recorded, audited, and accurately maintained.
You've got a problem there. Bobby Godsell said recently in a public platform, garnishy orders, we told the mining industry, let's stop paying them. Let's just take them off our books. So to actually get them back onto into a more reputable basis is going to be difficult.
It is going to be difficult, but I think if we can prove that they can be done well and legitimately and securely, then I think we can argue that they're necessary, but they must be done responsibly and they must be done with accuracy and with no abuse.